Hello, this is JC De Guzman, and I'm now reporting to you our top 5 gainers and top 5 losers analysis for May 2019. This is the first uh, top 5 gainers and top 5 losers analysis video for May 2019. And these are the 10 stocks that we will be discussing tonight. We have ICT, URC, AGI, FLI, Double Dragon, MPI, AEV, Aboitiz Power, WPI, and the last one is LPZ. So you will hear about my technical analysis, and then I'll give you my overall sentiment followed by my recommendations or trade setups. Let's start with ICT. Today is Thursday, by the way, and ICT closed today at 131.90. That's above its volume weighted average price of 130.87. So that's a bullish signal. That's one bullish signal already. And ICT is also moving above its 10 SMA. FYI, I'm seeing a perfect bullish alignment of the three simple moving averages. Okay, support is near 119.70, resistance is near 133.40. This ascent in price was also matched with a bullish volume that was registered above its 10-day volume average. Foreign investors, especially, they are actually bullish today on ICT as they registered a net foreign buying amounting to 325 million pesos. Okay. I'm also seeing, by the way, MACD is still below the signal line. Technically speaking, it's still bearish. However, I'm seeing a formation of a bullish convergence between the MACD and the signal line. Okay, that's what I see here. Now, you'd like to know, what if ICT breaks out above 133.40? What will be the next immediate resistance or psychological resistance? So I have zoomed in the chart so we can drag the chart to the bottom. So here, it's at 139.5. It's in confluence. When I say it's in confluence, it means it's parallel. It's aligned to the 61.8% of the Fibonacci extension. Now, if it breaks out above 139.5, the next psychological resistance would be near 151.6. Okay? But of course, this will change. This will change because we're going to have a different origin for the swing low and swing high of our Fibonacci, up Fibonacci. Okay? That will change. But for now, the psychological resistance above 133.4 is 139.5. Now let's take a look at the price and volume distribution or trade and volume distribution chart of ICT. By the way, where did it close today? At what price? 131.9. And that's close to the intraday high. The most traded and most voluminous range is between 131 up to 132.9. Okay, 131 up to 132.9. That's closer to the intraday high than the intraday low. That's another bullish signal coming from ICT or for ICT rather. So my overall sentiment on ICT is bullish, especially with this volume and support coming from the foreign investors with their uh, buying sentiment for today. For 2019 year to date, they are still bullish on ICT. If you have ICT, I think it's better to just smoothly follow your trailing stop loss instead of worrying and wanting to know for a predefined target selling price. As you already know, we don't use TSP or our target selling price here at Equilist Analytics. Instead, we are using a TSL, a trailing stop loss. So we don't have to bother ourselves, stressing ourselves, thinking for a predefined target selling price. It's useless. Why? Because you would still do a recalibration, a reevaluation, a reassessment, every time the price goes higher, you will have to recalculate your trading stop loss anyway. So why accustom yourself into setting up a predefined target selling price when you will end up reevaluating your trading stop loss in the end anyway. So it's just a waste of time. It just consumes another space uh, on your journal. If you're going to use a target selling price. So I am bullish on ICT, and if you have ICT, just smoothly follow your trailing stop loss. I'm not saying that it will surely go beyond 133.4. Again and again, we're just talking about probabilities here. So don't quote me for telling something about certainties or guarantees, because that will never happen. Okay? So there. Now, if you don't have ICT and you're asking yourself, is it okay if I will enter a new position in ICT for the first time? You can do so, but do it very minimal only, within the range that got the biggest volume and the highest number of trades. Why minimal? Because it's already close to its historical resistance already. It's closer to the historical resistance than the historical support. So there you go. Just do it very minimal. Maybe just a few shares, just to test the waters if ICT still has more than enough gas to break out above 133.4. Now, if you are a relatively newbie trader, as in you just opened an account last week or a month ago, I would suggest not to enter a new position in ICT for now. Now, if it draws closer to 133.4, I suggest that you reassess, reevaluate. If those four criteria that we always check are still present, then if they are, then you can do a test buy then. Okay? What are those four criteria? Should be a green candlestick. Number 2, last price should be above the VWAP. Number 3, volume should be at least above the 50% of the stock's 10-day volume average. Number 4, the most traded and the most voluminous range should be closer to the intraday high than the intraday low. I have kept on actually repeating these four criteria over and over again, even in the past videos. So if you have watched or if you listened to the previous videos, by now you must be, I don't know, maybe you're already sick and tired of me telling these four criteria over and over again. But it helps, especially for the new subscribers. Especially if you haven't watched the previous videos yet, so you must hear these four criteria. That's why I repeat these four criteria at least in the first stock that I'm discussing in our top 5 gainers and top 5 losers video analysis or analysis video. Okay, there you go for ICT. Let's move on to URC. URC closed on Thursday at 164. It broke above its previous resistance at 160. Okay, so that previous resistance, that's why it's previous, it's no longer a resistance but a support. So prior to 160 becoming a support, the previous support prior to 160 was 136. Okay, for URC. Okay, definitely you'd like to know what's the resistance then. So there you go for the resistance. It's 174.4. I'd like to highlight something here. This 174.4 is not really a psychological resistance. It is still a historical resistance here. That's why I have zoomed in, or I have zoomed out the chart so you would see here the resistance that was registered in January 9, or maybe in the second week of January 2018. It's still a historical resistance, 174.4. But when I plotted the up Fibonacci with the swing low right here and the swing high over here, I also got the same resistance level, which is in confluence with the 61.8% up Fibonacci extension. It's perfectly aligned, perfectly in confluence with the historical resistance at 174.4. Okay. Okay, for what it's worth, I just wanted to say that maybe just to highlight the not really magic, but the use or the power of the 61.8% of the Fibonacci. Okay, as we all know it, the 61.8% ratio is the golden ratio when it comes to using the Fibonacci. Okay, now this ascent in price was also above its VWAP of 161.07, and there was also a towering volume above the 10-day volume average. There was also a net foreign buying worth 265 million pesos today. For 2019 year to date, foreign investors are bullish, still bullish on URC for 2019 year to date. And I'm also seeing a perfect bullish alignment among the three SMAs of URC. Plus, there's already a crossover. Let me say that again. MACD already crossed above the signal line, and the price is also above the 10 SMA. So if you are familiar with my 10 SMA and MACD combo, that's a buy signal already. Okay, now trade and volume distribution chart. Let's take a look at it. So the most traded and most voluminous range is somewhere, it's between 160 all the way to 164.4. 160. If we would like to cut this into two different ranges, it will become 160 up to 161.3, and then another one between 164 all the way to 164.4. Anyhow, that is above, or that is closer to the intraday high than the intraday low. My overall sentiment on URC is bullish. If you have URC, just hold on to your stock and just follow your trailing stop loss. You should be fine. You should be fine. Remember, this is also in our investment guide for long-term investors. Okay, just head on to that tab and take a look at my rating for the short-term and the long-term horizons. Okay, if you have URC, hold on to your trailing stop loss. You have a data-driven basis to top up if you would like to. I'm not insinuating, I'm not forcing you, or I'm not alluring you to do a top up on URC. It's up to you. Okay? Now, if you don't have URC, you also have a data-driven basis to enter on a new position, because we are seeing buy or bullish signals all over the chart. Okay? Just make sure you don't buy at any price. I always emphasize this word any. We don't buy at any price. We don't sell at any price. We only buy and sell within the most traded and most voluminous range at that very moment. Okay? Not at the price and volume distribution chart last week, but at that prevailing moment, at that precise moment. That's why you will have to know, you have to know how to do your own trade and volume distribution analysis, just like what I do here. If you don't know how to do it yet, that's the reason why we have the private clients forum, so you can, cry for help. Not really cry for help, but to ask for help. Okay, so that I can give you the latest trade and volume distribution chart of the stock that you have, and give you my analysis or synthesis about it as well. Okay, there you go for URC. I'm bullish on this stock. Next, we have AGI. AGI closed on Thursday at 15.56. Support is at 14.48. Resistance is at 16.4. The ascent in price went above the 10 SMA. It was also above the VWAP of 15.31. Okay, the three SMAs are not yet in a perfect bullish alignment, but if the price will continue to draw closer to the resistance, we will see these three SMAs form a perfect bullish alignment. Anyhow, there's a strong volume, bullish volume above the 10-day volume average today. Meanwhile, foreign investors did not have it. mean to say, they did not have the appetite to buy because they sold about 45. Well, they bought, but overall the net foreign trade was a net foreign selling worth 45 million pesos for today. Nonetheless, because of the price action, there I'm seeing a crossover. The MACD line already crossed above the signal line. That's a golden ratio. So with the price moving above the 10 SMA and the MACD above the signal line, that's a buy signal. Okay, that's a buy signal. Now let's take a look at the trade and volume distribution chart of AGI. The most traded and most voluminous range is between 15.2 all the way to 15.56. That's closer to the intraday high than the intraday low. So all four criteria are present. The 10 SMA and MACD combo is also becomes true. It's also true today. So we have several bullish signals on the chart of AGI. So I am bullish on AGI. If you have AGI, let's say you bought AGI either close or below 14.5, you should be fine for as long as you uh, stick with your trailing stop loss. Consider locking in some profits, however, once the price touches or draws closer to 16.4. I said lock in some profits. If you'd like to sell all, it's up to you. Okay? Now, if you don't have AGI, it's technically okay. Technically okay to do a test buy because of those bullish signals that we've seen all over the chart of AGI. Okay, next we have FLEE. Philinvest Land closed on Thursday at 1.62. Support is at 1.44. Resistance is at 1.63. Okay, so this ascent in price was also above its VWAP of 1.6, and it was also matched with the volume above its 10-day volume average, another bullish one. Foreign investors bought about 4 million pesos worth of shares. They are bearish on the other hand for 2019 year to date. MACD, what do you expect? Of course, it will continue to rise higher than the signal line. Okay, I'd like you to notice this one that RSI, although we don't use RSI that much, RSI is already approaching the classical overbought level. So later on, I'm going to say something with my recommendation. Of course, we will have to check on the trade and volume distribution chart of FLEE first. So the most traded and most voluminous range is between 1.58 all the way to 1.62. Still, that's closer to the intraday high than the intraday low. So overall, I'm bullish on FLEE, but I advise that you consider locking in some profits near 1.60, between 1.6 to 1.7. Okay? Now, if you don't have FLEE, I suggest that you wait for a pullback for the meantime. Okay, you wait for a pullback. Now, just in case FLEE will continue to rise higher than 1.63, and those four criteria that we always check are present, then you can do a test buy. Again, not at any price, but within the most traded and most voluminous range at that moment that you are deciding whether at what price you will have to place or position your buying price or your entry price. If it breaks out above 1.63, the next resistance will be 1.78. Alright, so there you go for FLEE. Let's move on to the next stock in the list. We have Double Dragon. Double Dragon closed on Thursday at 26.25. Support is near 23 pesos. Resistance is at 28 pesos. There is already a perfect bullish alignment among the three SMAs. The closing price today at 26.25 is above the VWAP of 26.17. It was also matched with the bullish volume above the 10-day volume average. Foreign investors cooperated as they registered a net foreign buying worth 7.8 million pesos. for 2019 year to date, they are bullish as well. I'm also seeing a bullish sentiment coming from the MACD signal. I see no sign yet of a bearish convergence with the signal line still moving bullishly above the signal line. I'd like to highlight as well that RSI is already approaching the classical overbought level. So therefore, before I drop my trade, before I drop my recommendation, let's take a look at the trade and distribution chart. First, the most traded and most voluminous range today was registered between 26.25 to 27 pesos per share. That's closer to the intraday high than the intraday low. All four criteria are present. The price is above the 10 SMA. MACD is above the signal line. We got lots of bullish signals on the chart of Double Dragon as well. So my overall sentiment is bullish, but my recommendation for those who have Double Dragon is to consider locking in some profits once it draws super close to 28 pesos per share. If you don't have Double Dragon and you are thinking if you should enter a new position, here's what you need to do first. Calculate your reward to risk ratio. This is the current price, 26.25. Your support is at 23, your resistance is at 28. There is a formula that I wrote in our quick start guide. Follow that. If you are happy with the reward to risk ratio, then you can do a test buy within the most traded and most voluminous range. So you cannot get a straight cut yes or no from my mouth. If you're going to ask me, sir, is it okay to buy Double Dragon within the most traded and most voluminous range tomorrow, first thing in the morning? Well, you can't get a straight cut yes or no. You will have to do the basic arithmetic. Calculate your reward to risk ratio. I've given you formula with lots of examples in our quick start guide already. So I have already empowered you with the logic, with the explanation of that logic, with examples for that logic, so that you can make a trade decision for yourself. Okay? There you go for Double Dragon. Next stock in the list, we have MPI. MPI closed on Thursday at 4.39. Support is near 4.33. Resistance is near 5.08. The descent in price was, unfortunately, it's below the VWAP of 4.44. There was also a bearish volume that's almost equal. Let's double check. It's higher, a little bit higher than its 10-day volume average. Foreign investors were also bearish today as they sold about 77 or 76 million pesos worth of shares, and they are bearish for 2019 year to date, especially in beginning the third week of March onwards. They have become doubly bearish compared to the previous months of 2019. Now, even though MACD is still above the signal line, I'm already seeing a formation of a bearish convergence between MACD and the signal line. Okay? Now, the RSI is already closer to its classical oversold than its classical overbought level. This means to say that there's a chance for us to see a rebound near 4.33. Okay? A rebound near 4.33. However, if the market still wants, or if MPI still wants to, continue its downtrend instead of bouncing away from 4.33, then so be it. Let it reach an exhaustion level. Okay, don't stress yourself. Don't stress MPI. Don't stress yourself. Don't hurry. Let it do its thing. If it wants to register a lower low, then so be it. Okay. Don't rush into the idea of entering a new position while the stock is busy skydiving, so to speak. Now, if you have, remember, if you have a position on MPI or in any stock, actually, you should know where your trailing stop loss is. Once it gets hit, you have to sell without looking back, because it's a waste of time doing the math, calculating your trailing stop loss only to ignore it. Okay? You can continue praying and hoping, but you have to be strategic as well. Okay? Hope and prayer are good. Hoping and praying, that's good. But don't use hope and prayer as your only strategy when it comes to growing your money in the stock market, whether it's about trading or investing. Okay? Combine hope and prayer with a data-driven strategy, just like what we do here, just like how I teach you. And that's the reason why I also show you my screen, so you don't just hear me, so that you can also see what I see, so you can do the same. A day will come, I'm hoping that you can speak and do better than I, okay, when it comes to whether trading or investing. Okay, anyhow, let's take a look at the trade and volume distribution chart of MPI. Okay, so the most traded and most voluminous range is between 4.39 to 4.41. Obviously, that's closer to the intraday low than the intraday high, a bearish signal. If you don't have MPI, don't enter just yet. Wait for the stock to test the support near 4.33 all the way to 4.3 or maybe even below. If you have MPI, you know the drill. Sell once your trailing stop loss gets hit. If your trailing stop loss is still below 4.39, maybe at 4.35, I think you have a data-driven basis to preempt your trailing stop loss. So what's preempt? Okay, go back to the quick start guide, press Control F, type in pre-empt, and then you will see the answer. Okay, now let's move on to the next stock. We have AEV. AEV closed on Thursday at 54 pesos per share. Support is at 50.2. Resistance is at 62 pesos a piece. The last price on Thursday was below the VWAP of 54.67. Okay? And there was a bearish volume as well that was above the 50-day or the 10-day volume average rather. Foreign investors were bearish as well as they sold about 36 million pesos worth of shares on Thursday. They are bearish for 2019 year to date. MACD is already bearish or moving below the signal line, not just today but since April 15. Okay, so you got your clue for the bearish trend last April 15. That was also the time when actually even before April 15, maybe around as early as April 11, the price already dove below the 10 SMA, but MACD just crossed below the signal line last April 15. So you get your hold your position signal, or no, not hold your position, but postpone your plan to enter a new position as last April 15. You got that warning last April 15, so to speak. Now let's take a look at AEV's trade and volume distribution chart. The most traded and most voluminous range for today was between 54.95 all the way to 55.1. Wow, it looks like it's a tie. Is it? No. It's still there were still more volume. There were still more volume and more trades registered closer to the intraday low than the intraday high. Don't forget there's still this 54 pesos right here. And this one got about a 1/3 of today's trades. Okay? So counting this one, it's still closer to the intraday low than the intraday high. Another bearish signal. So if you don't have AEV, don't buy just yet. Don't buy just yet. The 4 criteria that we're looking for are not present. The 10 SMA and MACD combo is false. Okay? So wait near 50 pesos. Wait near 50 pesos. If you have AEV, oh, you know my answer. Where is your trading stop loss? Okay? AP, Aboitiz. It closed on Thursday at 36.6. It's already below the 10 SMA and it was below the VWAP of 36.70. There was a bearish volume on Thursday as it went higher than its 10-day volume average. Foreign investors sold about 22 million pesos worth of shares. They are bearish for 2019 year to date as well. Although MACD is still moving this above the signal line, I am already seeing a formation of a bearish convergence with the signal line. Okay, support is near 33.75, resistance is near 39.25. Okay, now let's take a look at the trade and volume distribution chart. It's quite semi-groggy all over the place, but nonetheless, the most traded and most voluminous range is between 36.7 to 36.8. That's between the closing price of 36.6, or below rather, or above the last price of 36.6. Okay, it's actually all over. There's this 36.7 to 36.8. There's this single price point at 37. There's another one at 36.6. Anyhow, if you're going to do the math, there's still more volume and more trades registered closer to the intraday high than the intraday low. Yep, it's still bearish. So my overall sentiment on AP is bearish. If you have AP, let's say you bought AP near 33.75, please lock in your profits. Lock in your profits. Again, lock in your profits. Okay, if you don't have AP, don't rush. Okay, don't rush. Add AP into your watch list if you are very interested, if you have bias on AP, but data wise, as far as our data is concerned, as far as my analysis is concerned, don't rush. Let it sell whatever it wants to sell for now. Maybe it will try to rebound near 33 or 35.3, which is in confluence with the 200 SMA. That's a conditional clause. It's not a guarantee that it will rebound here. So just monitor AP close to 35.3. If it decides not to bounce away but to continue its downtrend, then adjust your waiting price all the way to the support at 33.75. But for now, I'm bearish on AP. Alright, next, WPI. WPI closed on Thursday at 0.73. 0.73. Support is near 0.65. Resistance is near 0.80. It's still moving above the signal line, by the way. However, today's red candlestick was below its VWAP of 0.75. The bearishness was also matched with the bearish volume that was more than 100% above its 10-day volume average. Foreign investors, on the other hand, were not, as usual, they registered a not so significant amount on WPI. MACD is still above the signal line, but if we will see another red candlestick on WPI on Friday tomorrow, we might be seeing a bearish convergence on the MACD's histogram. For one, RSI's last line has already bent towards the southward direction. Okay, now trade and volume distribution. Let's take a look at WPI's trade and volume distribution chart. The most traded and most voluminous range is between, it's almost the entire thing, 0.73 to 0.78, but there's still more towards the intraday low than the intraday high. Therefore, still a bearish one. Okay, let's take a look at this. My overall sentiment on WPI is bearish, and my recommendation, if you don't have WPI, don't buy it just yet as well. If you have WPI, let's say you bought it near 0.65, I do hope you are already planning on how to lock in your profits by now. Okay, next in the list we have LPZ, Lopez Holdings Corporation, closed on Thursday at 4.58. That was below the VWAP of 4.67. Immediate support is near 4 pesos per share. Immediate resistance is near 5.10. So the descent in price also came with a red volume above the 10-day volume average. Foreign investors sold about 1 million pesos worth of shares, still not a significant amount. MACD continues its bearishness below the signal line. RSI, on the other hand, is close to it's super close to its classical oversold level already. Let's check if there's a historical support. Okay, let's see. Let's see if Lopez will try to do a rebound near 4.37. Let me plot that line so you can easily see that. Somewhere here. Somewhere near 4.37. Let's see. Okay, let's see. Maybe between 4.3 to 4.4. Okay, remember that range, 4.3 to 4.4. Let's see if LPZ will try to make a rebound within 4.3 to 4.4 range. Okay, but still, it's already Friday tomorrow. You know the usual sentiment on a Friday, it's a selling day. Okay, MACD still bearish below the signal line, and let's see the trade and volume distribution chart of LPZ. The most traded and most voluminous range is between 4.58 all the way to 4.7. It's obviously closer to the intraday low than the intraday high. My overall sentiment on LPZ is bearish. If you have LPZ, I hope you already sold your position even before it went below 5.10. Okay? Because for me, it doesn't make sense anymore. If you still have LPZ now that it's below 5.10, because you know it hit as high as 5.93 when January 22. So if you bought LPZ below 4.4 or below 4.3 to below 4.4, you should have already raked in or locked in, collected your profits even before it went down, went below 5.10. Okay, I do hope none of you has a 50% tolerable risk when it comes to short-term trading. That's a super duper risky risk tolerance. Okay, if you don't have LPZ, don't buy just yet. Okay, don't buy just yet. Remember that range that I mentioned a while back. See if that will become a potential rebound zone for LPZ. Otherwise, wait to as close as 4 pesos per share. So there you go for my top 5 gainers and top 5 losers analysis for May 2, 2019. My name is JC De Guzman. I'm wishing that one day you will be able to analyze like this and trade independently. And I wish you a profitable week, especially tomorrow, the last trading day of the week. Have a great day for tomorrow. Bye for now.